Well, one of my subscribers, a fellow by the name of GS Debunked, who is a capitalist in the UK, has been bugging me for years and years about investing. And it is a topic that I get asked about every once in a while. People say, you know, what do you buy stocks? What are good ideas? And I always tell them, I don't know. I'm not an investor. When I was a kid, I had a stockbroker relative who would occasionally give me, single, double shares in stocks. But I never did anything with them other than sell them when I was in college and collect, the pittance of dividends, which probably maybe $2-3 a year, because it wasn't very much. What I've done with my disposable income has been basically the extreme pessimism, zombie apocalypse kind of idea where first I got a year's supply of food. The very first check I ever got when I was working in oil, I went and bought a year's supply of freeze-dried food, canned food from a Mormon co-op. Just by the by, a lot of the food storage areas are Mormon. And then after that I bought water filters. Obviously I bought a whole bunch of guns and ammo, bulletproof vests, a whole bunch of tools, axes, knives. I even kind of consider books to be that way because books are kind of like a cheap form of entertainment, if you didn't have power. And then I started buying precious metals, first silver, and then later, much later, gold, and still buy both. And that was pretty much the way I looked at it. That's what I was going to put my money towards. And then maybe some land, and maybe a house, and that sort of thing. Well, GS Debunked is always bugging me to read things, and to make videos about things too, which is hypocritical because he never makes videos, but he's a capitalist, an entrepreneur, he doesn't have a lot of time. I appreciate that. So he demanded that I read, he demanded this the way he is, he doesn't ask, he demands that I read this or that book. And I always politely tell him that, look, I have a lot of books that I have to read, and I may or may not get to the ones you think I should, but I'll take a good book recommendations, and the ones he was suggesting weren't expensive. In fact, some of them were books that were very, very popular 10-15 years ago, which means there's a lot of copies that are in print, which means their price on Amazon when you get them used is pretty low, to the point where it's kind of a throwaway. And so the three that he recommended were Real Estate Riches, The Richest Man in Babylon, and Rich Dad, Poor Dad. And I did not bring The Richest Man in Babylon with me to work this time, so I can't read it, but I brought the other two, and I finally read Rich Dad, Poor Dad. And let me just start with some of the criticisms I have of the book. It's very much, and in fact I'd say it's mostly a pep talk. It's kind of a get out there, go do this, but without a lot of really actionable, useful information. Like it's the kind of thing that says you should go out and incorporate, but it doesn't tell you how to do that. And also there's a very heavy kind of, oh, and by the way, here's my other book and here are my seminars. And when I started reading it, I immediately looked up the guy online, and you know what he's saying? He is a real capitalist, a real entrepreneur. Although very recently his company kind of went bankrupt, one of them. Although I don't think that was ever his main claim to fame. He was a successful millionaire, but again, then he makes a lot of money now being a best-selling author and giving lectures. And I don't know if this is still the case, but it was the case that he was basically running some kind of, lecture circuit kind of deal, where he was even subcontracting the lectures out to other people. So, I was cognizant of that. There are other things. The book was written in 96, 97, and those are much more optimistic times in terms of speculating in both real estate and the stock market. Obviously there were not just the 2008 crash, but there's the dot-com bubble also right after that. And a big part of me says I would be much more pessimistic than he would be. So there's that. Not a lot of actionable intelligence, not the best writing. There's a lot of, I think it's just a little oversimplified. But that said, there were a few very good points in the book, and I think, and it might just be where I was in my life at the point, it radically changed my ideas of what I am going to do in the future. At this point in my life, I have a good, steady income, the highest that I've ever had. I have no debt. All my student loans are paid off. All my car loans are long paid off. The mileage I get paid for work actually covers my entire automotive expenses, so all the insurance, all the gas. So basically that's free, and I still live at home, which isn't free. I do pay utilities, but it's very cheap. It's very little. So, and I was just actually, I read the book on Friday and Saturday last week, and today, I haven't checked, but today I was supposed to receive a substantial amount of money, and I literally, don't, other than buying gold and silver, maybe indulging in like another gun or something like that, which, I mean, I think I'm up to 15 at this point, so I don't really need that many more. Always could use more ammo, but I don't want more guns. I wasn't exactly sure what I was going to spend it on, and I'm not the kind of, I don't blow it. Whenever I've taken money, I don't go to Vegas or use it all on a car. I mean, I did buy a new car once, or it was used, but it's a newer car. But I use that for work, and I get paid for it, so it's actually something that earns me money, and I needed it for that purpose. A couple of the takeaways that I did like about the book is that he says, look, you need to have assets. You need to have things that generate what he calls, and it's probably not just him, passive income. So this would be like a stock that pays you dividends, or a mutual fund, or there's lots of things that could do this. A bank, actually, if you loan money to a bank, you receive interest, although that's kind of like, it's the most secure, but it's the lowest also remuneration you can get. And basically, you need as much passive income as you can. If you have enough passive income, you don't have to work, and you don't have to worry about whether you have a job or not. And I realized that I'm in a perfect position, really, to heavily start accumulating assets and developing a passive income, which for the time being, I wouldn't use the passive income to live off of. I'd use the passive income to buy more assets, to generate more passive income. If you start early enough, you can play it totally safe. If you start say when you're 20, it's plausible to just put all and you have an income. It's plausible to put all your money in mutual funds and bank accounts, and eventually the interest on that will be sufficient to offer you some standard of living. Since I'm 30, it's not going to be wise for me to only do that. So I'm thinking that my initial passive income assets will be secure ones, but then I'll continue to diversify into more, a certain percentage will go into riskier ventures. It's money that I can afford to lose. It's not money I'm borrowing, so it's not like it'll be time lost, but not time wasted, I guess. But part of the reason I'm making this video is that I am just starting this process, and I'm a total novice. I went online and just did a search on the 10 best books for investing. I came up with a couple lists, and I ended up buying I think 8 books, and then I was talking to GS Debunked on Facebook. He's one of my Facebook friends, and of course he was psyched as hell that I was doing what he suggested, and he offered other books that I should buy, including Peter Schiff's book, which I didn't buy, but I bought the other one he suggested. So I'm going to read the Real Estate Riches book here in a day or two. I'm reading a book by John Taylor Gatto right now. I'm going to finish that first. I'm going to read the Real Estate Riches book, and then I'm incorporating these investing books into my reading schedule. I'm not abandoning my previous reading schedule. I'm simply, my reading schedule is I'm always reading 2 books, and each one is in a specific category. So right now, one of my 2 books I'm reading is always about China. So I'm reading about, I'm just finishing up my reading on the Qing. When that finishes, I'm going to read about modern or communist China, Mao, the famine, and a couple others, and then the Ming. The other side, it's been a little bit more fluid, and it's going to be these investment books right now, after I finish Gatto's book. And some of the books that I recommended, the only one I didn't buy was the one by Warren Buffett, because I just hate his guts. The only major difference I see, the way I'm probably going to develop, is I am going to, because of my caution, because of my worry about ups and downs in the market, I'm probably going to put much more in precious metals than any of these books are going to suggest, other than Schiff's book, which GS Debunked said is essentially what that message is. I will never forget, when the 2008 crash happened, I wasn't an investor, so to speak, but I did have holdings in silver, physical holdings in silver. And I recall that was when I was just starting to work on the oil field, and most of the guys on the oil fields, they have 401ks and other investments, and they'd all lost 40-50% of their worth at that point. Now in the succeeding years, they've gained it back, but how much of that gain is inflation and how much of that is actual increased purchasing power is a different question. But as they were losing, the price of silver almost, I want to say it almost doubled. It went up a whole lot. When I first started buying silver, it was $8, $9, $10, $12 an ounce. I think the most I ever bought, for the first couple of years was maybe 18, and it quickly jumped up to 25, 30, and within a year after that, it even got up as high as 50 for a brief period. And so it's kind of interesting if most of your funds are in the main kind of bubble economy, I guess the FRN based economy, then it's going to collapse periodically. And potentially, I'm not necessarily saying this is going to happen, but potentially can be eradicated. Hyperinflation can eradicate those. It's happened in Germany twice in one generation. It could happen here. The government is incentivized to trend in that direction. Now there's a point where they are destroying themselves as well, and so they might enforce austerity. I like what Robert Higgs says. They can cut inflation. All they have to do is stop paying people. People always say, oh, they have all these trillions and trillions of dollars in liabilities, but they're the government, so they don't have to pay their liabilities. I'm just sorry. They tend to have to pay their debtors. They don't like to default on who they borrow from, unless they become like North Korea. But they can default on all their pension plans, all of the things that all the welfare, the Medicare. That stuff is negotiable. Everything that they hand out is negotiable, and negotiable in a unilateral way, not in an actual negotiation type way. So I'm not saying hyperinflation is going to happen. I'm saying that it could. Even if it doesn't, just high inflation itself is going to eat up your savings or diminish your investments one way or the other. Your cost of living is going to go faster than your passive income is going to be able to keep up. And gold and silver and a few other things are good stores of wealth. So I'm going to read these books, and if they convince me sufficiently otherwise, I will listen to them, but I think that's where I'm leaning right now. In real estate, I don't know, I have some ideas floating in my head, but they sound kind of crazy. I'll just give a hint. I am from Michigan, and there is actually a very famous area in Michigan it's a famous area, everyone's heard of it, but it's also famous, or infamous rather, for the incredibly low land prices, in the order of $1, $2, $3, $4, $500 for a plot of land, small urban plot. And I'm gonna have to look into it a whole lot more, but that area is, if that's not rock bottom, I don't know what rock bottom is, which would kind of be an intriguing possibility at the very least. So that's what I'm thinking. I am soliciting advice here if there are people. I don't think many of my subscribers are particularly wealthy or successful. entrepreneurs, but if they are, I certainly would like to hear from you. If you have any good reference material, blogs, commentators, books, please let me know. It's kind of weird. It's like I kind of slowly got to this crossing the road, and now I feel like I'm going to have this trajectory, this acceleration down unforeseen trajectory. I'm really in the point where I'm not even risking very much. I don't have a home to lose. I don't have a family. So, I mean, it's only money, and the money that I have. You say it's only money. You don't want to lose it, but the money that I have on its own is not going to. It's not gonna do it. It's just the most you can do is store it, and then it's going to be depleted. It will be consumed. And so, as long as you're able to keep making more. Now, there's another element to this, that he said that I already kind of agreed with, is you want to live within your means. You don't want to be spending on luxuries with your hard-earned money. And I've been pretty good about that, unless you want to say buying gold and silver is a luxury, or I guess you could say buying a gun is a luxury. Buying your first gun's not a luxury. Buying your 10th gun, maybe. So, anyway, this is going to be a pretty short video, and I'll talk to y'all later. Bye-bye.